So yes, shall we start? First myth, depreciation as per accounts and depreciation as per income tax both are not same. Okay, under accounts depreciation calculation is different, under income tax depreciation calculation is different. Are you able to understand? Now, under accounts, depreciation is calculated for each asset individually. However, under income tax, depreciation is not calculated for each asset individually. Depreciation is calculated for group of assets, which is also called as block. So, under income tax, depreciation is calculated block wise. Under accounts, depreciation is calculated for each asset individually. Next. Under accounts, there are various methods to calculate depreciation. However, under income tax, depreciation method that is used is written down value method, except in case of power sector undertakings that I am going to discuss. Other than power sector undertakings, when we are calculating depreciation, the method of depreciation that is followed is written down value method. So simple, depreciation as per accounts and income tax are different. Under accounts, depreciation calculated individual asset wise. Under income tax, depreciation is calculated block wise. Under accounts, various methods are there to calculate depreciation. Under income tax, there is only one method to calculate depreciation, that is written down value method, except in case of power sector undertakings. Now, immediate doubt is, sir, you said depreciation will be calculated on block, right? How to classify or how to group assets into block? That is the next question. There are two conditions to classify assets into a block. Those assets which are having similar nature and which are having same rate of depreciation, those assets will be classified into one block. Those assets which are having similar nature, which are falling under same class, okay, and are having same rate of depreciation, they are classified into one block. Similar nature or same class. I will tell one example. Building 1 is there, rate of depreciation 5%. Machinery 1, rate of depreciation 15%. Building 2, rate of depreciation 10%. Machinery 2, rate of depreciation 40%. Building 3, rate of depreciation 5%. Furniture, rate of depreciation 10%. These are the assets that are there in the business. How many assets are there in the business? 6 assets are there in the business. Now, can I classify building and machinery into one block? Building class is different, machinery class is different. I cannot classify building and machinery into one block. Not possible. Can I classify building 1 and building 2 into one block? Building 1, building 2, both are same class, same nature. But building 1 rate of depreciation is 5%, building 2 rate of depreciation is 10%. I cannot classify building 1 and building 2 into one block, correct? Now, can I classify building 1 and building 3 into one block? Building 1, building 3, both are buildings only, same class. Building 1 rate of depreciation 5%, building 3 rate of depreciation 5%. So I will classify these two assets into building 5% block. Now did you understand how to classify assets into block? Assets falling under the same class and are having same rate of depreciation, or assets having similar nature and having same rate of depreciation will be classified into one block. Now, can I group machinery 1 and machinery 4 into one block? That is not possible, because machinery 1, machinery 2, both are same class only, but machinery 1 rate of depreciation is 15% and machinery 2 rate of depreciation is 40%. So I cannot group. Now tell me, can I group machinery 1 and building? Can I group machinery and building? No, because machinery is different class, building is different class. So machinery 15% will be treated as machinery 15% block. Machinery 2 will be considered as machinery 40% block. Furniture is separate class, so furniture will be treated as furniture 10% block. Building 2 is having 10% rate of depreciation, that is classified separately as building 10% block. Okay, let's say for example, machinery 3 is there, its rate of depreciation is also 40%. Now what I will do? Yeah, Missionary 2 and Missionary 3 I can classify into one block, Missionary 40% block, because both are Missionary 2 and Missionary 3, and both are having same rate of depreciation. Is it clear? With this you got clarity. So to calculate depreciation, first take all the assets. After taking all the assets, classify them based on two conditions: same class, same rate of depreciation. Those assets which are falling under same class and having same rate of depreciation will be classified into one block. Is it clear? Are you able to understand? Next, conditions for allowance of depreciation. That means for an SSE, in case of an asset, depreciation is allowed as expenditure. Depreciation is allowed as deduction, subject to satisfaction of two conditions. Only if these two conditions are satisfied, then only depreciation is allowed as deduction. First condition, SSE shall be the owner of the asset. That means only owner of the asset can claim depreciation, tenant cannot claim depreciation. Lessor can claim depreciation, lessee cannot claim depreciation. So to claim depreciation, SSE should be the owner of the asset. Only owner of the asset can claim depreciation, tenant cannot claim depreciation. Now, however, there are exceptions. That means in these four cases, even though he is not the owner, still depreciation is allowed. First, hire purchase. You all know, in case of hire purchase, ownership will be transferred upon payment of last installment. Let's say I purchased a car on finance basis. Finance period is 5 years. Every month I will pay EMI, equated monthly installment. So at the time of purchase I am not the owner. Financier is the owner. After 5 years, if I repay all the installments, then I will be the owner of the car. So in case of hire purchase, even the ownership is transferred after last installment, still from the date of purchase, depreciation is allowed. Are you able to understand? So that is the exception. General rule is depreciation is allowed only if SSE is the owner. In case of hire purchase, even the SSE is not the owner on the date of purchase, still depreciation is allowed. Is it clear? Next, co-ownership. My friend is a chartered accountant. I am also a chartered accountant. We both purchased one car. Car cost is 14 lakhs. I contributed 7 lakhs. My friend contributed 7 lakhs. Both are using this car for our profession purpose. So what is the cost of car? 14 lakhs. Now, am I the exclusive owner of that car? I am not the exclusive owner of that car. I am co-owner of that car. How much I contributed? 7 lakhs. So in case of co-ownership of an asset, to the extent of contribution made by the owner, co-owner, to that extent he can claim depreciation. So to the extent of 7 lakhs, I can claim depreciation in my books of accounts. That means SSE need not be the exclusive owner. Even if SSE is the co-owner, sufficient he can claim depreciation to the extent of the amount he contributed. Is it clear? Good. Next, asset acquired under, capital expenditure on leased asset. For example, I took a room on rent. In that room, I got studio work done. Okay, that means I got ceiling done, I got walls done as per the requirement to record YouTube videos. Now, building does not belong to me. I took building on lease. However, on that building, I have incurred a capital expenditure. I got ceiling, I got walls done, I got painting done. Lease period is for 5 years. Now for the next 5 years, this capital expenditure will help me for my YouTube growth, right? That means what? Like on leased asset, I have incurred a capital expenditure. Even though leased asset does not belong to me, whatever the capital expenditure that I have incurred is there, that belongs to me. For that capital expenditure, I am the owner, and on that capital expenditure, I can start claiming depreciation. So on ceiling, I will start claiming depreciation. On interior work, I will start claiming depreciation, even though that work is done on the leased asset. Is it clear? So for capital expenditure on leased asset, depreciation is allowed to the person. Depreciation is allowed to the lessee who has incurred such capital expenditure. Is it clear? Next, asset purchase covered under 53A of Transfer of Property Act. Yesterday only we have discussed. There is agreement between KS and me. I paid the consideration. From tomorrow onwards, I occupied the possession of this building. Okay, but registration will be done after 6 months. Even though registration is done after 6 months, from tomorrow onwards, I am the beneficial owner of this building. Are you able to understand? Legal owner is case only. After 6 months, once registration is done, I will be the legal owner. But from tomorrow onwards, I am the beneficial owner. Who is getting benefit from tomorrow onwards from this building? I am getting the benefit. From tomorrow onwards, I am the beneficial owner. Even as a beneficial owner also, I can start claiming depreciation. Is it clear? So this is first condition. I explained only condition 1. SSE should be the owner of the asset. Second condition, SSE shall use the asset for his business or profession. I purchased a car. I am using car for personal trips, okay, devotional trips. Now, car is not used for business. On that car, I cannot claim depreciation. Only if asset is used for the purpose of business or profession, then only depreciation is allowed as deduction. Otherwise, depreciation is not allowed as deduction. Usage is classified into two types: active usage or passive usage. Are you able to understand? So, usage is classified into two types: active usage, passive usage. Now, let's say I purchased a car, daily I am using it. This is called as active usage. I purchased inverter or I purchased power generator. If something happens and power goes off, my recording should not stop in the middle. Then I will switch off the inverter or generator and I will continue the recording. That means on a daily basis, I am not using the generator. I am using the generator only when power is off. Okay, or else fire extinguishers are there. Daily I am not spraying fire extinguishers on you, right? Fire extinguishers are kept there only if the fire breaks out, then only we use fire extinguisher. Okay, it's not body spray, right? Daily we do not spray fire extinguisher. That means fire extinguisher, power generator, inverter, they are not used on active basis. They are kept ready for use. Even if asset is kept ready for use sufficient, you can start claiming depreciation. I will ask one question, you have to answer. I purchased 10 fire extinguishers. I kept them on go down. Okay, they will be installed in the site after 5 days. Now can I start claiming depreciation on those fire extinguishers? No. Usage means the day on which fire extinguishers are actually installed in the premises. From that date onwards, you should start calculating depreciation. Another important thing, under Income Tax Act, depreciation is not calculated from date of purchase, but depreciation will be calculated from date on which asset is put to use. So what is relevant is not date of purchase, what is relevant is date of put to use. Is it clear? So if asset is purchased in current previous year, but it is not used actively, it is not used passively, we should not calculate depreciation. Are you able to understand? Only if asset is used in the business, either actively or passively, then only you should calculate, then only you can claim depreciation on such asset. Is it clear? So this is with regard to usage of the asset. No depreciation on land. Come on. If there is any person who calculates depreciation on land, we should consider them as lunatic or person of unsound mind. Correct? Can anyone calculate depreciation on land? No, but there is one exception. Do you know cricket ground? In cricket ground, entire land preparation will be done, right? Like whatever that gardening, that green field and all. So if any capital expenditure is incurred on land, that capital expenditure is eligible for depreciation, but by land itself it is not eligible for any depreciation. Okay. Next, reduced depreciation. See, reduced depreciation. First year, I purchased one asset. That asset is put to use for greater than or equal to 180 days. Now, I will calculate full rate of depreciation. In first year, if asset is put to use for less than 180 days, I will calculate half rate of depreciation. The moment I say this, many students will tell me, sir, you don't know the subject. Sir, asset was purchased on 1st December. It was used for 4 months. How can you calculate half rate of depreciation? Don't try to search logic in income tax. Income tax is not logical. Okay, under accounts, for how many days you have used, okay, or from date of purchase to 31st March, how many days are there? For those many days depreciation is allowed proportionately. Under income tax, proportionate depreciation is not allowed. Don't ask me the logic. That is said we are calculating. Okay, it was asked us to calculate depreciation in that manner. Okay, if asset is put to use for greater than or equal to 180 days, Income Tax Act says to calculate full rate of depreciation. If asset is put to use for less than 180 days, Income Tax Act says us to calculate half rate of depreciation. Asset is purchased on 31st March. Still, you can claim half rate of depreciation. Sir, asset is used only for 1 day. Even though it is used for 1 day, you can claim half rate of depreciation. Sir, it is illogical. I admit it is illogical. Can you tell what is the basis for basic exemption limit of 2,50,000? Why only 2,50,000? Why it is not 50 lakhs? That is said we are following. Okay, here also it was, we are like, Income Tax Act says depreciation to be calculated in this way. We are calculating the depreciation in this way. Don't think of logic under income tax. What is said, please do. Okay, good. Now, if asset is put to use for greater than or equal to 180 days, you need to calculate full rate of depreciation. If asset is put to use for less than 180 days, you will calculate half rate of depreciation. This half rate of depreciation concept is applicable only in the first year. From second year onwards, even though asset is put to use for less than 180 days, even though asset is used for only few days, even though asset is used for only few hours, still you can claim depreciation for the whole year. Is it clear? That means what? Second year, asset is put to use for greater than 180 days. You will calculate full rate of depreciation. Second year, asset is put to use for less than 180 days. Still you will calculate full rate of depreciation. Is it clear? That means half rate of depreciation concept is applicable only in the first year. Are you able to understand? Is it clear? So you can read this. Amount of depreciation is not proportionate to period of use during the previous year, because the moment I explain depreciation, first doubt that student gets is that, sir, it is not logical. It is not logical only. I agree. Next, first year asset is not put to use, no depreciation. Asset is put to use for greater than or equal to 180 days, 100% depreciation. That means what? Full rate of depreciation is allowed. Asset is put to use for less than 180 days, 50% depreciation. That means what? Half rate of depreciation is allowed. From subsequent year onwards, even if asset is used actively or passively for a few days or even few hours, still you can claim depreciation for the whole year. Is it clear? If any asset is not put to use in the first year but put to use in the second year for less than 180 days, still 100% depreciation is available. First year, fire extinguisher purchased, it is kept in godown, no depreciation for first year. Second year, in the month of October, fire extinguisher is used. That means in second year, fire extinguisher is used for less than 180 days. Still in second year you can claim whole depreciation, full depreciation. Is it clear? Next, classification of depreciable assets. So whatever the assets are there, depreciable assets, all depreciable assets are classified into 4 classes. How many classes? 4 classes. Tangible assets are classified under 3 classes. Intangible assets are classified under separate class. You know tangible and intangible, right? Good. Under tangible assets, there is building, class 1, furniture, class 2, plant and machinery, class 3. Intangible assets are covered under class 4. Is it clear? Now, in case of building, if there are any roads, bridges or culverts that are constructed, even roads, bridges and culverts are also considered as buildings and whatever the rate of depreciation that is applicable for building is there, the same rate is applicable for buildings and bridges also. Okay. Now, furniture is nowhere defined in the act, but if there is any product that is used as a convenience, we can call it as a furniture. Furniture also includes electrical fittings, switchboards, keys, all these are also called as furniture. Next, you all know intangible assets, patents, trademarks, copyrights, except goodwill. Goodwill is intangible asset, but as per income tax, depreciation should not be calculated on goodwill. That's why I am saying intangible assets except goodwill. On goodwill, depreciation is not allowed. Is it clear? Any asset which is not building, which is not furniture, which is not intangible asset will be classified as plant and machinery. I am using mic. Whether mic is building, can you call mic as building? No, right? Whether mic is furniture, whether mic is intangible asset, so mic will be classified as plant and machinery. There is video recorder. Is it building? Is it furniture? Is it intangible asset? No, it will be classified as plant and machinery. I purchased bare income tax act 12,000 rupees book. It is asset to me, right? I am an income tax faculty. I have to go through income tax act. Okay. Whether book is building, whether book is furniture, am I using it for my pillow? No, right? I am not using book as my pillow, right? No. Whether book is intangible asset? No. Book will be considered as plant and machinery. Doctor, he is doing surgery with surgical instruments, knife, dissection, scissors. Okay. Knife, surgical instruments are there. Whether surgical instruments are furniture, whether surgical instruments are building, whether surgical instruments are intangible assets, no, right? They are considered as plant and machinery. Is it clear? So any asset which is not building, which is not furniture, which is not intangible asset, it will be classified as plant and machinery. Now, shall we see rates of depreciation? First, let us see for buildings. Buildings used mainly for residential purpose. The moment I say residential purpose, one student will stand. Sir, residential purpose means personal use, right? Why personal used asset is like on personal used asset, why depreciation is allowed? This is the question that will be raised. See, residential buildings need not be used for personal purpose. They can also be used for commercial purpose. Example, employee quarters are there. Who will construct employee quarters? Company will construct employee quarters. That means employee quarters building is building owned by company. But for which purpose quarters are used? They are used for residential purpose. That means in business, if there is any building that is used for residential purpose, example employee quarters, on that building you need to apply 5% rate of depreciation. On that building you need to apply 5% rate of depreciation. Except hotels. See, hotels are also used for residential purpose, but on hotels we do not apply 5% rate of depreciation, we will apply 10% rate of depreciation. So any building used for residential purpose except hotels, on that we will apply 5% rate of depreciation. Is it clear? Next. Building used for commercial purpose. So if any building is used for commercial purpose, that means general buildings, whatever the buildings that are used in the business are there. Okay, on commercial buildings we will apply 10% rate of depreciation. Next, if there are any temporary constructions, for example, we are planning to construct 50 floors apartments. Okay, that means the apartment will extend over 50 floors. So there are, like, let's say 100 employees working there. For 100 employees, temporarily one shed was constructed. That shed will be there for 2 years until construction of 50 floors are completed. Once it is completed, shed will be demolished. That means shed is also a building, but it is temporary construction. On that we will apply 40% rate of depreciation. Is it clear? Are you able to follow me? Are you clear? I can't hear.
Yes, sir.
Okay, good. Now, furniture and fittings. On furniture and fittings, we will apply 10% rate of depreciation. What chocolate adugutunnada? Now, the desk on which you are sitting, it is furniture to KS Academy. On that desk, they will apply 10% rate of depreciation. Is it clear? So furniture includes electrical fittings such as electrical wiring, switches, sockets. So on furniture and fittings, the rate of depreciation that is applicable is 10%. Next, intangible assets. Intangible assets excluding goodwill, the rate of depreciation applicable is 25%. Is it clear? Now, shall we see for plant and machinery? Motor cars other than used in a business of running them on hire. See, if motor cars are used in hire business, for example, I purchased two cars. I gave those two cars on rent to Ola and Uber. The moment I gave car to Ola, minimum daily 100 kilometers the vehicle will be driven. That means whenever asset is used in hire business, that means my main business is buying cars and giving cars on hire basis, rental basis. Now whenever car is used in hire business, rental business, the usage is higher. As the usage is higher, higher rate of depreciation is allowed. So whenever car is used in business of running them on hire, rate of depreciation is 30%. For my profession purpose, I purchased a car. Okay, to go from this street to that street, I will use car. Whether usage is higher? No, right? Usage is not higher. So whenever car is purchased other than in hire business, then rate of depreciation is low. Rate of depreciation is 15%. So very simple, motor car purchased. If you have purchased for rental business, rate of depreciation is 30%. If you have not purchased for rental business, for motor car, rate of depreciation is 15%. Is it clear? Now, not only motor car, motor buses, motor lorries and motor taxis. Very simple, asset used in hire business. Okay, then for that asset rate of depreciation is 30%. If motor asset is not used in business of running them on hire, rate of depreciation is 15%. Is it clear? Good. Next, aeroplane and aero engines. Very simple, on aircrafts rate of depreciation applicable is 40%. Aeroplanes and aero engines. Molds used in rubber and plastic goods factories. See, there is this chair. You take in this brand any chair, it will be of the same size, same length, same breadth. How is it possible? It is possible because of the mold used in manufacturing of chair. How clay Ganesha is made? There will be clay ball. Okay, the clay ball will be hit against the mold. Automatically clay will get converted in the form of Ganesha. Okay, similarly liquid plastic will be there. Liquid plastic will be filled into the mold and it will be cooled. Thereby liquid plastic will get solid, it will go into solid state and the chair will come. So chair will come exactly of same size, same length and breadth because of the mold. In Telugu it is called as rupu. Okay, so on mold is also asset, because using mold we will create hundreds of assets. So whatever the mold is there, on mold the rate of depreciation applicable is 30%. So molds used in rubber and plastic goods factories, on such molds we will apply 30% rate of depreciation. Life saving medical equipment, ventilator. Okay, so if there is any life saving medical equipment, on that rate of depreciation applicable is 40%. Containers made of glass or plastic used as refills. Nowadays we are seeing 20 rupees PET bottles. If you go 5 years ago, there are no PET bottles. We use it to get the thumbs up Pepsi in glasses. Okay, there will be glass bottles. Like we will go to shop, he will give glass bottle, we will drink and we will keep it in the plastic tray. Correct? So if there are containers made of glass or plastics and if they are used as refills means what? Once we finish drinking, we will keep it in plastic tray, again it will go to factory, it will be cleaned, new thumbs up will be poured into it, again it will come into the shop. That means what? The same bottle is used for multiple times as a refills. So whenever glass bottles or plastic bottles are used as refills, even they are also assets. On them the rate of depreciation applicable is 40%. Is it clear? Next, computers including computer software. Do you know Tally? Yeah. So when you purchase computer or when you purchase computer software, on them you need to apply 40% rate of depreciation. air and pollution control, water pollution control equipment, solid waste control equipment, and solid waste recycling and resource recovery systems. Very simple. Pollution control equipment, whether it is air, water or solid. Okay, on pollution control equipment, rate of depreciation applicable is 40%. Energy saving devices. I purchased solar panels. Okay, using solar energy, I am running my building. Okay, that means what? Whatever it is a renewable energy. I can get how much energy I want. So, like for the purpose of saving electricity, I am using solar panels. So solar panels are energy saving equipment. On solar panels, the rate of depreciation applicable is 40%. Is it clear? Very, very, very important. Listen. If the car is electric car, if the vehicle is electric vehicle, rate of depreciation applicable is 40%. Is it clear? I don't know whether you knows this or not. Normal car, motor car 15%, 30%. Electric car rate of depreciation applicable is 40%. I will tell another point. Electric cars are also two types. Fully electric car. Second one is hybrid. That means what? To some extent they will go on diesel or petrol, then they will switch to battery. Okay. So even on that cars also rate of depreciation applicable is 40%. So electric vehicles, battery powered or fuel cell powered. Fuel cell powered means what? Hybrid. That means up to certain distance it will go using fuel, then after it switches to battery. Okay, hybrid cell. Very important. On electric vehicle rate of depreciation 40%. Do you know this before? Don't, don't you know this? Okay. Huh? హైబ్రిడ్ కార్స్ గురించి తెలుసా? మస్క్ ఉన్నాడు కదా, మస్క్ ఉన్నప్పుడు ఎందుకు తెలీదు? Books, rate of depreciation applicable is 40%. In our profession, our main assets are books. You all will take photo with your books, right? The moment you qualify CA inter, whatever the book is there, you will pile all those books, you will keep your hand over there, you will take selfie and you will upload status CA inter cleared, correct? So our main assets are books. On books, rate of depreciation applicable is 40%. Ships, vessels, speedboats operating on inland waters. Very simple. Air, like aeroplanes 40%, ships 20%. Are you able to understand? Next, other plant and machinery. Is there any rate of depreciation mentioned for my mic? No, right? Mic is a plant and machinery, right? For mic I will provide 15% rate of depreciation. Is there any rate of depreciation mentioned for that camera? No, right? It is plant and machinery, right? On that I will apply 15% rate of depreciation. There is projector. Is there any rate of depreciation mentioned for projector? No, right? For that I will apply 15% rate of depreciation. There is TV. Is there any rate of depreciation mentioned for TV? No, right? We will apply 15% rate of depreciation. So residuary rate is 15%. Oil wells, rate of depreciation 40%. Windmills, if they are installed before 1st April 2014, rate of depreciation is 15%. If windmills are installed on or after 1st April 2014, rate of depreciation is 40%. Is it clear? Did you understand? Now, let us see how written down value of the block will be calculated. I said depreciation will not be calculated for each individual asset, but depreciation will be calculated for block of assets. Sir, how do we calculate depreciation block wise? Let us see. First, this is the format. There will be opening written down value of the block. To opening written down value, we will add additions. Additions are classified into two types. Those additions which are put to use for greater than or equal to 180 days, those additions which are put to use for less than 180 days. Why are we classifying? Because if asset is put to use for greater than or equal to 180 days, we will calculate full rate. If asset is put to use for less than 180 days, we will calculate only half rate. That's why we are classifying. Next. So you will arrive at opening written down value plus additions, correct? So to opening written down value plus additions, we will reduce money receivable on assets sold. Please listen carefully. Everyone look at me. I sold two assets. On sale of asset, there will be book value, there will be written down value, there will be fair market value, there will be sale value. You should not reduce fair market value, you should not reduce book value, you should not reduce written down value. What you need to reduce is sale value of assets sold. This is very simpler. Okay, at what price asset is sold, reduce the sale value, selling price of the asset sold. Are you able to understand? So not fair market value or stamp duty value, very important. You should not reduce. Sometimes written down value will be reduced, okay, book value will be reduced. Under accounts you can reduce book value. Under income tax you should not reduce book value, you have to reduce the sale value. So whenever any assets are sold, you need to reduce sale value of the assets sold. So opening written down value plus additions, thereby you arrived at opening written down value plus additions. From that you will reduce assets sold, you will reduce sale value of the assets sold, thereby you will arrive at depreciable value. The name, the word itself is saying depreciable value. That means that is the amount which is eligible for depreciation. On depreciable value, we are going to calculate depreciation. We will reduce current year depreciation. We will also reduce additional depreciation. Thereby, we will arrive at closing written down value of the block. Is it clear? This is the format. Now, whatever the depreciable value is there, depreciable value is to be apportioned on LIFO basis, last in first out basis. Okay, what are the assets recently purchased? Recently purchased assets are those assets put to use for less than 180 days. So on assets put to use for less than 180 days, we will calculate half rate of depreciation. On balance depreciable value, in balance depreciable value, which assets will be there? Those assets put to use for greater than 180 days and opening written down value, correct? So on balance depreciable value, we will calculate full rate of depreciation. I know you will get confusion, that's why I gave you problem. Shall we do problem so that you will get better clarity? Umasankar and Co., a sole proprietorship, owns 6 machines. How many machines it owns? 6 machines. Enti ani adagaddu, iPad, camera, okay, laptop, all these are 6 machines. So these 6 machines are put in use for business in March 2024. March 2024 means which previous year? 24-25. Wow. 25-26. 23-24. March 24 means previous year 23-24. Super Basel, you are fantastic. The depreciation on these machines is charged at 15%. That means it is plant and machinery 15% block. Do you agree with me? Opening balance of these machines are 8,50,000. 3 of the old machines were sold on 10th June 2024 for 4 lakhs. So whenever machines are sold, what you need to reduce? Do you need to reduce book value? No, you need to reduce sale value. A second hand plant was bought for 8,50,000 rupees on 30th November 2024. My dear students, listen carefully. Put to use greater than 180 days. If any asset is purchased up to 3rd October, that asset is put to use for greater than 180 days. You can calculate. If any asset is purchased on or after 4th October, then that asset is put to use for less than 180 days. So I have given material to you, right? Write down there, asset put to use for greater than 180 days. You need to remember the date, 3rd October. Up to 3rd October, if any asset is put to use, it was put to use for more than 180 days. On or after 4th October, if asset is put to use, it is used for less than 180 days. Okay? Simple. In examination, you will not, like, you are not required to waste time. Remember the dates, 3rd October, 4th October. Now, when it was purchased 30th November 2024, that means put to use After after 4th October, right? Put to use less than 180 days. So you will calculate half rate of depreciation, correct? So just look at the screen. Help me, plant and machinery 15% block. How much is opening written down value? How many assets are there? Assets amount. There are 6 assets, right? Amount is 8,50,000. To this we will add additions. Additions are classified into two types. Put to use greater than 180 days. Are there any assets put to use greater than 180 days? No. Is there any asset put to use less than 180 days? What is it? Second hand plant and machinery, right? What is its value? 8,50,000. So how much is opening written down value plus additions? Opening written down value plus additions 17 lakhs. From this we need to reduce assets sold, right? Do we reduce book value or sale value? Sale value. How much is sale value of assets? 4 lakhs. So how much is depreciable value? Depreciable value is 13 lakhs. Now here many students will make mistake. Listen carefully. We have arrived at depreciable value, right? We need to apportion depreciable value now. How much is depreciable value? 13 lakhs. Depreciable value is to be apportioned on LIFO basis, last in first out. What is the asset that is purchased newly? Those assets which are put to use for less than 180 days, they are purchased newly. So out of 13 lakhs, first priority you should give to assets put to use for less than 180 days. How much? 8,50,000. How much is balance depreciable value? I did not have calculator, you should help me. 4,50,000. So on this you will apply half rate of depreciation. On this you will apply full rate of depreciation. %15. Tell me how much is depreciation? This one? 8,50,000 into 7.5%. How much? Okay, good. So how much is total depreciation? So did you understand how to calculate depreciation? Depreciable value you have to apportion. When you are apportioning depreciable value, first priority should be given to assets put to use for less than 180 days. Balance depreciable value, you will calculate full rate of depreciation. On assets put to use for less than 180 days, you will calculate half rate of depreciation. Any doubt, Kaushik? K1, K2. Kaidi 1, Kaidi 2. So how much is depreciation? Less current year depreciation. 1,31,250. So how much is closing written down value? 11,68,750. So by this time, I believe you understood how to calculate depreciation. Shall we go ahead? Everybody, are you able to follow me? Are you clear? Now, in the above case, if sale value is 11 lakhs, calculate amount of depreciation. This you need not write, just listen to me. Okay? So, no. Opening written down value plus additions 17 lakhs. 7 sale value is not 4 lakhs. In second case, sale value is 11 lakhs. If sale value is 11 lakhs, how much is depreciable value?
6 lakhs.
Yeah, depreciable value is 6 lakhs. See, asset put to use for less than 180 days is 8,50,000. Did you have 8,50,000 worth of depreciable value? No, right? So that's why total 6 lakhs will be allotted to asset put to use for less than 180 days. On the 6 lakhs, we will calculate half rate of depreciation. So depreciation is equal to 6 lakhs into 7.5%. How much?
45,000.
Now did you understand? I already told you, don't apply logic here. You need not apply your brain. You have to feel happy. Whatever that is said, do it. Okay? Don't think of logic. Sir, in that the second-hand plant and machinery cost is 8,50,000. Depreciable value is 6 lakhs. How can you calculate depreciation on 6 lakhs? 6 lakhs. You should calculate depreciation on 8.5 lakhs, right? No. Don't apply logic. You have to calculate depreciation on depreciable value because depreciable value amount is eligible for depreciation. Apportion the depreciable value to the extent it is available. Okay, so depreciable value, if asset put to use for less than 180 days is fully available in depreciable value, that is totally depreciated. Okay, so we need to allot depreciable value. First, you need to allot depreciable value to asset put to use for less than 180 days. Still, if there is balance depreciable value means on that you will calculate full rate of depreciation. Is it clear? Are you able to understand? Am I doing that? Now, next concept is additional depreciation. Yes, patience is a lot required to understand depreciation. First, additional depreciation is available only for two businesses. Every business cannot claim additional depreciation benefit. Additional depreciation is available only for manufacturing business or power sector undertaking or power generating unit. So those who are engaged in the business of manufacturing of power or those who are engaged in the business of manufacturing or distribution of power, they can claim benefit of additional depreciation. So two SSEs are eligible to claim additional depreciation: those who are engaged in manufacturing business, those who are engaged in power generation business. Okay. Trading business cannot claim additional depreciation. Service oriented business cannot claim additional depreciation. Only manufacturing business or power generation business can claim additional depreciation. Even for power generation business and manufacturing business, additional depreciation is not available on furniture. Additional depreciation is not available on intangible assets. Additional depreciation is not available on buildings. Additional depreciation is available on only plant and machinery. That means additional depreciation benefit is available only for one asset, which is plant and machinery. Even in plant and machinery also, if it is second hand plant and machinery, additional depreciation is not allowed. Only for new plant and machinery, additional depreciation is allowed. Even though it is new plant and machinery, for ships, aircrafts and transport vehicles, additional depreciation is not allowed. Are you able to understand the concept? Now I will tell straight away. Additional depreciation is available only for two entities: manufacturing, service oriented. Additional depreciation is available for only plant and machinery, only for new plant and machinery. Even for new plant and machinery also, for ships, aircrafts and transport vehicles, additional depreciation is not available. Is it clear? Sir, how much additional depreciation is allowed? Additional depreciation is equal to 20% of actual cost. Listen. Current year depreciation, that is calculated on written down value. But additional depreciation is not calculated on written down value. Additional depreciation is calculated on actual cost of the asset. Another difference is there. Current depreciation is calculated for a block. Additional depreciation is not calculated for a block. Additional depreciation is calculated for each eligible individual asset. Okay, good. If asset is put to use for greater than 180 days, additional depreciation is 20% of actual cost in current previous year. If asset is put to use for less than 180 days, additional depreciation is 10% of actual cost in current previous year and 10% of actual cost in immediately succeeding previous year. Let's say in 24-25, plant and machinery, new plant and machinery is purchased. Additional depreciation is equal to 20% of actual cost in 24-25. If asset is put to use for less than 180 days in 24-25, 10% additional depreciation in 24-25, in 25-26 balance 10% of actual cost of new plant and machinery is additional depreciation. Is it clear, everybody? Next point. If SSE is paying taxes under default tax rates, that can be 115 BAA, 115 BAB, 115 BAC, 115 BAD, 115 BAE. Under section 115 series, if SSE is paying taxes, additional depreciation benefit is not available. Is it clear? Next. Additional depreciation is not available for second-hand plant and machinery. I already told you, whether second-hand plant and machinery is purchased in India or outside India, additional depreciation benefit is not available. Next, if plant and machinery is installed in office premises or residential accommodation or any guest house, then also additional depreciation is not allowed. For example, office is there, administration department, in that air conditioner is purchased, additional depreciation not allowed. Air conditioner is purchased in guest house, additional depreciation is not allowed. Air conditioner is purchased in manufacturing area, additional depreciation is allowed. See, how many filters are there? First filter only for those who are engaged in manufacturing and power generation business, additional depreciation is available. Only for plant and machinery, additional depreciation. Only for new plant and machinery, additional depreciation. Only for plant and machinery used in manufacturing area, additional depreciation is allowed. If plant and machinery is used in office, premises, guest house, residential accommodation, additional depreciation is not available. Is it clear? On trucks or on transport vehicles, aircrafts, ships, additional depreciation is not available. Plant and machinery on which 100% deduction is allowed. See, for scientific research, if you purchase any plant and machinery, 100% depreciation is allowed, right? On such plant and machinery, again additional depreciation is not allowed. Another important point, even additional depreciation is also reduced from written down value of the block. Is it clear? We have seen format, right? In format, what I have said, additional depreciation will also be reduced from written down value of the block. Is it clear? Additional depreciation expenditure is not allowed separately. It will also be reduced from written down value of the block. I purchased a new plant and machinery in current previous year. In current previous year only I sold a new plant and machinery. Additional depreciation is not available. Is it clear? Understand how much depth the concept is. He will test conceptually only. He will go to the core concept. So don't expect him to give you easy question paper. Please expect God to give you the power to understand the concept deeper. So go through additional depreciation concept. I'll give you 1 minute. Shall we discuss one problem consisting of normal depreciation as well as additional depreciation? Once we do this problem, you will be able to do any problem. Okay, shall we do? Mr. Kunal, a proprietor, engaged in the business of generation of power. If he is engaged in power generation business, he is eligible for additional depreciation, right? Furnishes the following particulars pertaining to previous year 24-25. Compute depreciation allowable under section 32 for assessment year 25-26 while computing his income under PGBP. The proprietor has opted for depreciation allowance on the basis of written down value, assuming he has exercised option of shifting out of default tax regime. Very good. Because if he is paying taxes under default tax regime, additional depreciation benefit is not available. Only if he is paying taxes under optional tax rates, additional depreciation benefit is available. Now, how much is opening written down value? 5,78,000. See, ICA intentionally gave purchase value. If you take 8 lakhs, Assam. Purchase of second hand machinery. Whether second hand machinery is eligible for additional depreciation? When it was purchased 29th December 24, that means put to use less than 180 days. See the beauty of reading the question. When you are reading the question itself, you should do the classification whether additional depreciation is available or not, whether full rate of depreciation will be calculated or half rate of depreciation will be calculated. Okay. Next, machinery Y 15% block purchased and installed on 12th July 2024 for generation of power. See, it is new machinery, right? So additional depreciation is available. When it was purchased 12th July, that means put to use greater than 180 days or less than 180 days. So we will calculate full rate of depreciation. Acquired, installed for use a new air pollution control equipment. Careful. For air pollution control equipment, what is the rate of depreciation? 40%. He gave 15% block. Don't take air pollution control equipment and don't dump it in plant and machinery 15% block. You should not dump. You should dump it in plant and machinery 40% block. Are you able to understand? So when you are reading the question, you should clearly understand what is the rate of depreciation applicable, whether full rate is applicable or half rate is applicable, whether current like additional depreciation is available or not. These three questions. So write down anywhere you want. When you are doing depreciation problem, three questions you have to ask. First, what is the rate of depreciation? Second question, whether full rate or half rate. Third question, whether additional depreciation is available or not. Before doing depreciation question, ask yourself these three questions. You will not commit a mistake. Okay, this is the key to success. Key to success in depreciation related problem. Three questions. What is the rate, whether full rate or half rate, whether additional depreciation is available or not. Now air pollution control equipment rate of depreciation 40%, right? It is also new, so eligible for additional depreciation, correct? When it was purchased 31st July, that means put to use greater than 180 days. So it is eligible for full rate of depreciation. New air conditioner purchased and installed in office premises. Whether air conditioner installed in office premises, is it eligible for additional depreciation? When it was purchased 8th September 24, put to use greater than 180 days. New machinery jet 15% acquired and installed on 23rd November, that means put to use less than 180 days. So you will calculate half rate of depreciation, and it is new one, right? So it is eligible for additional depreciation as well. Sale value of an old machinery X sold during the year, purchase value, written down value. Super. He gave purchase value, he gave written down value, he also gave sale value. Purchase value, sale value, written down value. You should not get tempted. Okay. If you go to function hall, there will be 5-6 sweets available. You should eat peacefully one by one. Okay, you should not merge all of them and you should not eat like that. Correct? So here also you need to peacefully think and take. You should take sale value. You should not take written down value. You should not take purchase value. Shall we calculate depreciation? Everybody, this calculation will be interesting. Plant and machinery 15% block. Plant and machinery 15% block. How much is opening written down value? Can someone tell me? 5 lakh. How many assets? Only one asset. Okay, those were not mentioned. Good. Additions. Additions are classified into two types, right? Put to use greater than 180 days. Tell me those additions which are put to use for greater than 180 days. Machine 1 na? Yeah, machine Y. How much?
8 lakhs.
Machine Y 8 lakhs. Next. Put to use greater than 180 days. We marked machine Y and machine Y and new air conditioner, right? That is also eligible for additional depreciation and it is put to use for greater than 180 days. How much air conditioner? 3 lakhs, huh? Tell. Machinery by 8 lakhs, new air conditioner 3 lakhs, total 11 lakhs. Now, assets put to use for less than 180 days. Can someone help me? Put to use for less than 180 days. Second hand machinery. How much? 2 lakhs. Okay. Next. Machine Jeddah. 3,25,000. So total 5,25,000. Halt. Hold on. Machinery Y. Is it eligible for additional depreciation? AC eligible for additional depreciation? Mark here only, so you will remember. Second hand plant and machinery, is it eligible for additional depreciation? Machinery Z, is it eligible for additional depreciation? Yes. Okay. Now, how much are opening written down value plus additions? $22 lakh 3,000. Are everyone getting the same answer?
Yes, sir.
Everybody? Now, I said we need to reduce sale value of assets sold less sale value of assets sold. How much? 3 lakh 10,000. 18 lakh 93,000. Can we call this as depreciable value? This is the amount on which we are going to calculate depreciation, correct? So depreciable value is 18 lakh 93,000, correct? From this we will reduce current year depreciation, we will also reduce additional depreciation, correct? So shall we calculate current year depreciation? Working note. How much is depreciable value? 18 lakh 93,000. It should be apportioned on LIFO basis, correct? Last in first out basis. So first priority should be given to assets put to use for less than 180 days. How much? 3 lakh and 5 lakh 25,000, right? Assets put to use less than 180 days. 3 lakh antunaru evaro narikelanni. Assets put to use for less than 180 days 5 lakh 25,000, correct? Balance depreciable value. How much? How much is balance depreciable value? 13 lakh 68,000. So we will apply 15% to 5 lakh 25,000 and we will apply 7.5% to 5 lakh 25,000 and 15% to 13 lakh 68,000. Can someone help me? 5 lakh 25,000 into 7.5%, how much? 2 lakh? Are you able to understand? Manoj, did you struck somewhere? What happened? Are you not listening properly? How much is total current year depreciation? 2,44,575. Yes. Current year depreciation is 2,44,575. We will also reduce additional depreciation, right? Now, additional depreciation is available for machine Y and machine Z. See, machine Z is put to use for less than 180 days, correct? So only 10% additional depreciation is available for machine Z, and for machine Y, 20% additional depreciation is available. Am I correct? Because machine Y is put to use for greater than 180 days, additional depreciation 20% is available. Machine Z is put to use for less than 180 days, so only 10% additional depreciation is available. Additional depreciation is to be calculated on written down value, correct? Correct. Additional depreciation is to be calculated on actual cost. నేనేం చెప్తే అది నమ్మకండి, ఓకే? Less additional depreciation. Machine Y, how much? 20% on 8 lakhs. 8 lakhs into 20%, how much? 1,60,000. Machine Z, 3,25,000 into 10%, correct? So how much is additional depreciation? 1,92,500. How much is total depreciation? Tell me. Total depreciation. Current year depreciation plus additional depreciation. 4,37,075. Okay. Good. Answer is correct only. How much is closing written down value? 14,55,000. How much? 14 lakh? 925. Now did you understand how to calculate? Your doubts relating to depreciation, I think they got sorted out with this problem. I tried to include normal depreciation, additional depreciation, put to use greater than 1 day, 180 days, put to use less than 180 days. So is it clear? Problem is not over. We calculated only one block, plant and machinery 15%. We need to calculate plant and machinery 40%, right? What is that? Air pollution control. Air conditioner kadamma. For air conditioner 15%. Yeah. Hair fall. Now plant and machinery 40% block. Shall we do it quickly? There is only one asset, right? We can do it quickly. Is there opening written down value? Kaushik, K1, Kaidi 1, you have to tell. Opening written down value how much? Opening written down value 2 lakhs. Where did you get 2 lakhs? For plant and machinery 40% block, is there any opening written down value? 40% block. Air pollution control equipment is 40% block, right? For that, is there any opening written down value given? Opening written down value is given for 15% block. See, I zoomed it. Opening written down value is given for 15% block. Opening written down value is not given for 40% block. Slowly you will also have specs like me. Opening written down value 0. Additions. Put to use greater than 180 days. Are there any additions put to use greater than 180 days? Tell me, air pollution control equipment, how much? 2,50,000. So opening written down value plus additions, how much? 2,50,000. Less sale value of assets sold. Are there any assets sold? No. So depreciable value. How much is depreciable value? 2,50,000. From this we need to reduce current year depreciation as well as additional depreciation. Current year depreciation 2,50,000 into 15%, correct? 40%. How much? 1 lakh. Whether additional depreciation is allowed? Whether additional depreciation is allowed or not? Business is power generation business. What is purchased? Air pollution control equipment. Is it new plant and machinery or old second-hand plant and machinery? New plant and machinery. If it is new plant and machinery, additional depreciation is available, right? How much? 20% of actual cost. 2,50,000 into 20%? 50,000. So how much is closing written down value? Closing written down value 1 lakh. Is it clear? Everybody? Shall we go ahead? Everybody? Now let us discuss actual cost. Sir, you are telling additions are classified into two types: put to use greater than 180 days, put to use less than 180 days, and cost is given in the question. We are taking that cost. But how to calculate actual cost of additions? There is process. Let's say I am into manufacturing of tires. For manufacturing tires, I require a plant and machinery. That plant and machinery is not available in Hyderabad. That plant and machinery is available in Mumbai. So in Mumbai I purchased that plant and machinery. Cost is 80 lakhs. From Mumbai to Hyderabad I have to bring. In my factory I have to install that plant and machinery. So for that plant and machinery there will be transportation charges. There will be transportation insurance. There will be carriage inward and carriage outward. To load the machinery I need to pay expense. To unload the machinery I need to pay expense. There will be loading and unloading charges. Okay, once that machinery comes to my factory, first what I will do trial run whether it is working properly or not. So there will be trial run expenses. When I am doing trial run, whatever the output comes, I will sell the output. I will get the sale value of trial run, that I will reduce from the expenditure of trial run. Are you able to understand? So these many expenses are there. And for example, the cost is 80 lakh rupees. Government gave subsidy of 20 lakh rupees. Whatever the subsidy that is given, that should be reduced from actual cost. So these are the steps that are there in calculation of actual cost of the asset. Do you know input tax credit, right? In GST you would have studied. If input tax credit is available, GST component is not added to the cost of the asset. If input tax credit is not available, then GST component will be added to the cost of the asset, correct? So first there will be purchase price. To that we will add taxes and duties paid if ITC is not available. If ITC is available, then we will claim input tax credit and that amount will not be added to the cost of the asset. Next, loading and unloading charges, insurance, transportation charges, installation charges, trial run expenses. Now, let's say to purchase plant and machinery, I took a loan. Loan was taken on 1st April 2024. On 1st April 24 only I purchased machinery, but it took 3 months to transport machinery from Mumbai to my factory in Hyderabad. So during these 3 months, and that plant and machinery is put to use from 1st July 2024 onwards. So for a period of 3 months, I purchased plant and machinery, but I did not use plant and machinery. So from date of purchase up to the date asset was put to use, whatever the interest on loan is there, whatever the borrowing cost is there, even that borrowing cost will also be added to cost of the asset. Is it clear? Once asset is put to use, whatever the interest is there, that interest will be debited to P&L account. It will not be added to the cost of the asset. Is it clear? So interest on loan taken for purchase of asset from date of taking loan up to the date asset is put to use. Whatever the interest cost is there, that interest cost will also be added to the cost of the asset. Next, if any subsidy or grant is received from government, that we will reduce. And if any cost is met by any other person, that also we will reduce from the actual cost. Thereby you will arrive at actual cost. Let's say government gave subsidy or my friend gave subsidy. Even like subsidy not only given from government, even if subsidy is given by third party, that will also be reduced from cost of the asset. So thereby you will arrive at actual cost. See, you need to incur all these expenses, right? To incur these expenses, if you make any payment for a single person in a single day more than 10,000 rupees in cash, that means for a single person in a single day, if these expenses are paid in cash, then that expenditure will not be added to the cost of the asset. Even payment made to goods transport operator, generally under section 40A3, if payment is made to goods transport operator, up to 35,000 limit is there. That 35,000 limit will not work here. 35,000 limit is only for revenue expense. For capital expenditure, there is only one limit, 10,000. Even for a single person in a single day, if you make for a goods transport operator for a single day, even though you make cash payment of more than 10,000, that will not be added to the cost of the asset. Is it clear? Are you able to understand? Understand the subject, how deeper it is. So for a single person in a single day, if you want to make these payments, you should make payment only by way of bank transaction. If you make payment in cash, that will not be added to the cost of the asset. If it is not added to cost, you cannot calculate depreciation, correct? So generally actual cost format is this, but there are some special cases. Shall we see those special cases? Asset used in regular business after it ceases to be used for scientific research. See, for scientific research, if you purchase any asset, you can claim 100% deduction in the year of purchase. If that asset is transferred from scientific research department to accounts department, it will come to general assets, right? You need to add that asset to block of assets. When you are adding it, you will add it at 0 rupees, because you already claimed 100% of the expenditure as deduction for scientific research. For example, if you have added it for 10,000 rupees here, again that 10,000 becomes depreciable, right? It amounts to double deduction. So to prevent double deduction, as already 100% of the expenditure is claimed as deduction, whenever asset used for scientific research is brought into regular business, that asset will be added to general block of assets at 0 rupees value, so that no second depreciation will be provided. Is it clear? Are you able to understand? Did you understand the logic as well? Next, on conversion of stock in trade into capital asset used in business. Tomorrow, Kaushik became so rich that he started gold business. Do you know that guy, bald guy? Double ever ki urke ravu. No one gets free money, okay? Now, likewise, Kaushik also started Kaushik jewelry. Kaushik has full hair, not like that guy, okay? Happy? Now, Kaushik gold. In Vijayawada, there is one shop with the name Kaushik Gold. There I purchased one bracelet also. Not this, another one. Okay. Kaushik Gold is there. Now, Kaushik got well settled. He is now 35 years old. He has family, kids, everyone. Okay. One fine day, a big war happened with his wife. Okay. He is into business, right? He is into business, right? Now, okay, I will not take that example. I will take another example. Kaushik is not into gold business. Kaushik is into AC business, air conditioner business. Okay. Now Kaushik is having air conditioner business. He is the exclusive dealer of Daikin. Do you know Daikin? Exclusive dealer of Daikin. Every customer who comes to Kaushik shop, they are laughing at Kaushik. You are having 100 ACs in your showroom, but you are not having one AC in your showroom. That means like stock of 100 ACs are available, but asset of one AC is not available in Kaushik showroom. Okay, that means Kaushik has taken one plain room, and in that plain room he is selling ACs. Okay, he does not have any AC for usage in his showroom. So Kaushik purchased 100 ACs for rupees 40,000 each, for rupees 40,000 each on 9th December 2024. As customers are laughing, Kaushik wanted to install one AC in his showroom. He cannot install Blue Star AC, right? Then they will laugh louder, okay? Because you are exclusive dealer of Daikin and you are using Blue Star AC. So that's why what he did, he has stock of 100 ACs, right? From stock of 100 ACs, one AC was pulled out, that AC is installed in his showroom. That means whatever the stock in trade that he is having, he is converting stock in trade into capital asset. Are you able to understand? So whenever stock in trade is converted into capital asset, on date of conversion, whatever the fair market value is there, the fair market value will be considered as actual cost of new AC. Is it clear? On the date of purchase it is 40,000, but on the date of conversion, like AC value is 45,000, fair market value is 45,000. Now actual cost of plant and machinery, actual cost of new air conditioner that is installed is 45,000 rupees. So on conversion of stock in trade into capital asset, actual cost is equal to fair market value on the date of conversion. Is it clear? You can see fair market value of stock in trade on the date of conversion. Where any asset is acquired by way of gift or inheritance, then actual cost is equal to return on value to previous owner. So whatever the return on value to previous owner is there, that will be considered as actual cost. Capital asset transferred from holding company to 100% subsidiary company. Actually, this transaction is excluded from definition of transfer and no capital gains are required to be calculated. గుర్తులేదా? భూల్ గయా? No worries, we will discuss in capital gains. Okay, so whenever capital asset is transferred by holding company to 100% subsidiary company or 100% subsidiary company to holding company, so in the hands of transferee, actual cost is equal to return on value to the transferor. Is it clear? So asset transferred from holding to subsidiary, then actual cost is equal to return on value of holding company. Asset transferred from subsidiary company to holding company. Who is transferee? Holding company is transferee. In holding company books, actual cost is equal to return on value to the 100% subsidiary company. Is it clear? Next, transfer of capital assets from amalgamating company to amalgamated company. BSNL, Vodafone, they merged together, formed a new entity, VI. Assets transferred from BSNL to VI. In the hands of VI, actual cost is equal to return on value in the books of BSNL. Is it clear? Or return on value in the books of Vodafone. So whenever assets are transferred from amalgamating company to amalgamated company, in the books of amalgamated company, actual cost is equal to return on value to the amalgamating company. Is it clear? Next, transfer of capital assets from demerged to resulting company. Tata Limited is there. Tata Limited is divided into two companies, Tata Limited and Tata Motors Limited. Tata Motors is one of the company of Tata Limited. Tata has many other companies, Tata Consultancy Services, Tata Salt, Tata Steel, many companies are there. But Tata Motors got separated from Tata Limited. That means Tata Limited is demerged company, Tata Motors Limited is resulting company. So whenever assets are transferred from Tata Limited to Tata Motors Limited, in the books of Tata Motors Limited, actual cost is equal to return on value in the books of Tata Limited. Is it clear? Now, asset used for business transferred earlier and reacquisition of the same. That means what? For example, I purchased one air conditioner for rupees 50,000. I used it for 1 year. 15% depreciation. How much? 50,000. Depreciation 15%. I think 7,500. Meekana nene better. Calculator level cheptana. How much is written down value? 42,500. Correct? Written down value is 42,500. Now, I sold AC to Kaushik for rupees 80,000. I intentionally sold. Kaushik called and said, "Sir, I am doing business, profits are getting huge. I wanted to claim extra depreciation so that my profit gets reduced. I will pay lower taxes." So he wants to claim extra depreciation, right? So I intentionally sold the machinery to him for 80,000 rupees so that he will claim depreciation, extra depreciation. So he used it for 1 year, less depreciation at the rate of 15%. How much? 80,000 into 15%, 12,000. Balance 68,000. Now I purchased it from Kaushik asset for 1 lakh rupees. Now I wanted to claim extra depreciation. I purchased asset from Kaushik for 1 lakh rupees. This game will never end. Whoever wants extra depreciation, from them asset will be purchased. So this loop came to the eyes of Nirmalamma, Income Tax Department. So she said, whenever the asset used by you, if you transfer that asset to another person earlier and if you reacquire the same asset, upon reacquisition, actual cost is equal to original written down value or reacquisition price, whichever is lower. That means 42,500 will be my actual cost. So asset used by me transferred earlier, if it is reacquired by me, actual cost is equal to written down value on the first transfer or reacquisition price, whichever is lower. Are you able to understand the concept? Is it clear? Kaushik, ardhamayinda? Now that you cannot claim additional depreciation. You can claim, but I cannot claim. Written down value at the time of original transfer or reacquisition price, whichever is lower. Did you understand with example well? Shall I explain further? Acquisition of asset to claim enhanced depreciation. Now, Kaushik told me, "Sir, you used one asset, you gave, like I used one asset, I gave asset to Kaushik. If the same asset is purchased by me, then written down value at the time of original transfer or reacquisition price, whichever is lower." So for this loophole, there is another loophole. What is that loophole? I will transfer Blue Star AC to Kaushik. Kaushik will transfer Blue Star AC to Sumedh. Sumedh is having Daikin AC. Okay, Daikin AC. Sumedh transferred Daikin AC directly to me. That means I don't want same Blue Star AC. I want air conditioner. So from Sumedh I took Daikin AC for enhanced price to claim enhanced depreciation. This is also loophole, right? Earlier loophole is countered. They said written down value at the time of original transfer or reacquisition price. If the asset transferred by me is reacquired by me, it is countered by Income Tax Department. Now I am not acquiring the same asset. I will acquire different asset for higher cost to claim enhanced depreciation. So that loophole is again busted. From loophole, another loophole was found. In this case, if income tax officer gets doubt, any person purchased asset with the sole intention of claiming enhanced depreciation, then with the approval of Joint Commissioner of Income tax officer will tell what is the actual cost of the asset. Whatever the value determined by income tax officer is there, that we need to take as actual cost of the asset. Is it clear? Actually, Income Tax Act is very easy. It is we who complicated Income Tax Act. Because when they have written rule very simply, we use it to find loopholes. To counter loopholes, they are extending the provision, they are complexing the provision. That's how Income Tax Act got complicated. Otherwise, it would have been very easy. We Indians are very good at finding loopholes. Now, sale of an asset to lessor and leasing back the same. Now, I have a building. Building worth is 10 lakhs. Rate of depreciation for building is 10% only. I will claim only 1 lakh as expenditure. Very cheap. Now, what I will do? I will sell my building to Kaushik. Same building I will take on lease for 5 lakhs per month. or 50,000 per month. 50,000 into 12, 6 lakh rupees. So instead of claiming 1 lakh rupees depreciation, I will claim 6 lakh rupees rent expenditure, or I will claim 6 lakh rupees lease expenditure. This is also loophole, right? Actually, building will be used by me only. Documentation work will be done. Documentation will be prepared in such a way that I sold building to Kaushik and Kaushik leased it back to me. Daily I only will be using the building, but only documentation will change. Now this is a loophole. To counter this loophole, sale and lease back. If the same asset is sold by me and the same asset is leased back by me, actual cost in the hands of Kaushik is equal to, now he is the lessor, right? In his books, actual cost is equal to written down value in my books. That means actual cost in the books of lessor is equal to written down value in the books of the lessee. Is it clear? So in the books of lessor, actual cost is equal to written down value in the books of lessee. Is it clear? Yes. Building previously used for private purpose now brought into business. In 2018, I purchased one building for rupees 15 lakhs. In 2020, I started business. So, whatever the building that is purchased for personal purpose is there, that is brought into business. If that is the case, whatever the 2 years used for personal purpose is there, for these 2 years you need to provide notional depreciation, and after reducing notional depreciation, whatever the balance written down value is there, that will be considered as actual cost. Okay, let's say 2 years are there, 10% depreciation on building, right? 1.5 lakhs, balance 13.5 lakhs. Second year 10%, how much? 1.35 lakhs. How much is written down value? 12.15 lakhs. This is to be considered as actual cost. So whenever building previously used for personal purpose brought into the business, in such a case, like actual cost of building is equal to original cost minus notional depreciation. Is it clear? My dear students, please remember this concept is applicable only for building. If I brought car, actual cost of car will be taken as cost of additions. Is it clear? For example, I purchased a car 10 years ago for 15 lakhs. Now I brought into the business. Actual cost is equal to 15 lakhs. Notional depreciation is not required to be reduced. Notional depreciation is required to be reduced only in case of building. Is it clear? Next. Asset brought into India by a non-resident. Actual cost of acquisition minus notional depreciation from date of its acquisition. That's what. Just like how, for example, in 2018 I purchased one laptop in USA. Assume I am a non-resident. Okay, that laptop I purchased it for personal purpose. On 1st April 2020 I started my profession. In my profession I am using that laptop. That means what? Like personal asset is converted into like business asset. Personal asset is converted into capital asset. Are you able to understand? In such a case, cost of acquisition is equal to original cost of laptop minus notional depreciation. Is it clear? Next. Any asset for which deduction under section 35 AD is allowed. See, if deduction under section 35 AD is claimed, then like under section 35 AD specified business, 100% of the cost of the asset is allowed as deduction. As 100% of the cost of the asset is allowed as deduction, like again actual cost will be considered as nil. Is it clear? See, if asset is transferred from specified business to non-specified business after 8 years, in such a case, in non-specified business, that asset is required to be added to the block. At what price it will be added to the block? It will be added at 0 rupees. Are you able to understand? Next, subsidy. I already discussed. If subsidy is received from government or third party, that will be reduced from cost of the asset. Only subsidy relating to the asset will be reduced from cost of the asset. If subsidy is received with regard to loss, then that subsidy will not be reduced from cost of the asset. If subsidy is received with regard to revenue expenditure, that will not be reduced from cost of the asset. Is it clear? If composite subsidy is received, let's say I purchased a machine A 50 lakhs, I purchased a machine B 30 lakhs, I purchased a machine C 20 lakhs. Okay, for three machines together, subsidy 10 lakhs was given. Subsidy 10 lakhs was given. Now, based on actual cost of the asset, we need to apportion the subsidy amount also. Here, total, let's say subsidy 5 lakhs is received, for example. So how much is total cost of all assets? 100 lakhs. Total subsidy is 5 lakhs. Now we have to apportion subsidy based on actual cost. 5 lakhs into 50 lakhs divided by 100 lakhs. 2.5 lakhs. Okay. 5 lakhs into 30 lakhs divided by 100 lakhs. How much? 1.5 lakh. Similarly, it will come 1 lakh, correct? So net cost of the asset will be 50 lakh minus 2.5 lakh, 47.5 lakh, 30 lakh minus 1.5 lakh, 28.5 lakh, 19 lakh. It will be 95 lakhs. Is it clear? So if subsidy is received for two or more assets together, if composite subsidy is received, that composite subsidy is to be apportioned among the assets based on actual cost of the asset. Is it clear? Good. Next, capital gains in case of depreciable capital assets. Listen carefully. Till now, I kept on discussing about depreciation. I did not discuss about capital gains in case of depreciable capital assets. Now, I will discuss. Listen, in block there will be assets, right? In block there will be some value, depreciable value. Only if there are assets in the block, and block is having positive value, then only depreciation is allowed. So two conditions are there for allowance of depreciation. First, there should be some assets in the block and block shall have some positive value. If there are no assets in the block or if block is not having positive value, in such a case depreciation is not allowed. In such a case capital gains are required to be calculated. Is it clear? So depreciation is guided by section 32. Capital gains are guided by section 50. Okay, capital gains in case of depreciable capital assets. Now, section 30 to section 50 both are mutually exclusive. What do you mean by mutually exclusive? If depreciation is allowed, capital gains are not required to be calculated. If depreciation is not allowed, then capital gains are required to be calculated. Is it clear? Section 32, section 50 both are mutually exclusive. So when depreciation is allowed, if two conditions are satisfied. Condition 1, there should be assets in the block. Condition 2, block shall have positive value. Okay. So there are assets in the block and block is having positive value. We will calculate depreciation and depreciation is allowed under section 32. There are assets in the block but block is not having positive value. In such a case, depreciation will not be calculated. In such a case, capital gains will be calculated under section 50. Is it clear? There are no assets in the block but block is having positive value. Then also depreciation is not allowed. You are required to calculate capital gains under section 50. There are no assets in the block is not having positive value. Then also depreciation is not allowed as deduction. Then also like capital gains are required to be calculated as per section 50. Is it clear? Are you able to understand? Now, I will explain 4 cases. How many cases are there? Case 1, case 2, case 3, case 4. I will explain all these 4 cases with 4 different examples so that you will get clear-cut understanding. Shall I go ahead? Now, case 1 you already know. We have solved in the morning. Case 1. There is air pollution control equipment. One asset is there in the block and block is having positive value 2,50,000. So both the conditions are satisfied. There are assets in the block is having positive value. That's why we have calculated depreciation. Okay, case 1, are you clear with? Case 1 is very easy. We have solved 2 problems in the morning. One is Umasankar and Co. and another one is like with regard to additional depreciation and current depreciation, we have solved one problem. Case 1 is clear, right? Now I will explain case 2. There are assets in the block, but block is not having positive value. Shall I explain the case? Plant and machinery, 15% block is there. All of you pay attention here. Opening written down value, 8 assets are there. Worth is 5 lakhs. Additions. Additions are 3 additions worth 6 lakhs. Now how much is opening written down value plus additions? 11 assets and 11 lakhs, correct? Now I sold 7 assets for 13 lakhs. I sold 7 assets for 13 lakhs. Sale value of assets. How many assets I sold? 7 assets I sold for 13 lakhs. 7 assets I sold for 13 lakhs. Now tell me, after reducing sale value of assets, still how many assets are there? 4 assets are there. Whether block is having positive value, block is having negative value. Block value can never be negative. You cannot make block value as negative. Understand with logic, can there be negative value to asset? It is completely illogical, right? Correct. So block value can never be negative. So even though they are sold for 13 lakhs, we will write them as, like here we will write them as, work out. We will write 11 lakhs and we will make written down value as nil. In this case, can we calculate depreciation? We should not calculate depreciation. There are assets in the block, condition 1 satisfied, but block is having negative value, condition 2 not satisfied. In this case, will you calculate depreciation? Depreciation is not allowed. In this case, we are required to calculate capital gains. See, we are right now dealing with depreciable capital assets. Depreciable capital assets are always treated as short-term capital assets. So in case of depreciable capital assets, short-term capital gain or short-term capital loss will arise. Shall we do calculation of short-term capital gain or short-term capital loss. Now, whatever the sale value is there, how much is sale value? Sale value is 13 lakhs. From that, we will reduce cost of acquisition is equal to opening written down value plus additions. Opening written down value plus additions. How much are opening written down value plus additions? 11 lakhs is allowed as cost of acquisition. Okay. Now, how much is balance? 2 lakhs. 2 lakhs will be considered as short-term capital gain. Is it clear? See here, how much? 2 lakhs, right? 2 lakhs will be considered as short-term capital gain. Is it clear? So, in case of depreciable capital assets, when you are calculating capital gains, what is full value of consideration? Sale value of assets transferred is full value of consideration. What is to be taken as cost of acquisition? Opening written down value plus additions are to be taken as cost of acquisition. Thereby you will arrive at short-term capital gain or short-term capital loss. Is it clear? So are you clear with second case? Shall I explain third case? There are no assets in the block and block is having positive value. Shall I explain? Case 3. Plant and machinery, 15% block is there. Opening written down value, 8 assets worth 6 lakhs. Additions, 5 assets worth 15 lakhs. How much are opening written down value plus additions? Opening written down value plus additions. Assets 13, 21 lakhs, correct? Now, let's say I sold all 13 assets. All 13 assets for 10 lakhs. All 13 assets are sold for 10 lakhs. Now, are there any assets in the block? Whether block is having positive value. Condition 1 not satisfied. There are no assets in the block. Condition 2 block is having positive value. Now, can we calculate depreciation? Think logically. If there are no assets in the block and still you will calculate depreciation, people will call you mad. Correct? Person of unsound mind. Correct? If you are angry at someone, you cannot use abusive words. You can use words given by law. Person of unsound mind, drunk and intoxicated, okay, lunatic. Yeah. Now in this case, depreciation is not allowed. So you need to calculate capital gains. Shall we calculate? Calculation of short-term capital gain or short-term capital loss. Why? Because it is a depreciable capital asset. Always they are treated as short-term capital assets. What is to be taken as full value of consideration? Sale value is to be taken as full value of consideration. They are sold for 10 lakhs, right? Now, what is to be taken as cost of acquisition? Opening written down value plus additions. How much are opening written down value plus additions? Opening written down value plus additions is 21 lakhs, correct? Now, how much is short-term capital loss? Short-term capital loss is 11 lakhs. Now, did you understand how to calculate capital gains? Shall I discuss fourth case? Everybody, in fourth case, there are no assets and block is also not having positive value, correct? Case 4. Plant and machinery 40% block. Opening written down value 4 assets 50 lakhs. Additions 2 additions 30 lakhs. How much are opening written down value plus additions? 6 assets 80 lakhs. All assets are sold. All assets are sold for 110 lakhs. Sale value of assets. All 6 assets are sold in the block for 110 lakhs. Now you cannot always, when you are doing problem in examination also, don't make written down value as negative. Written down value can never be negative. You have to make written down value as 0. Okay. So written down value 0, maximum 80 lakhs is allowed as deduction. So whether block is having negative value, yes, block is having negative value, 30 lakhs of negative value. Are there assets in the block? There are no assets in the block. Condition 1 not satisfied. Whether block is having positive value, no, block is not having positive value. Both the conditions are not satisfied. In this case, will you calculate depreciation? You will not calculate depreciation. Will you claim depreciation? You will not claim depreciation. In this case, you are required to calculate capital gains. Is it clear? Shall we calculate calculation of short-term capital gain / short-term capital loss? Okay. How much is full value of consideration? Sale value is to be taken as full value of consideration, correct? How much is sale value? Sale value is 110 lakhs. From this we will reduce cost of acquisition. How much is cost of acquisition? Opening written down value plus additions, correct? How much is opening written down value? Opening written down value 50 lakhs. 50 lakhs plus 30 lakhs. 80 lakhs is cost of acquisition. So how much is short-term capital gain? Short-term capital gain is 30 lakhs. So now did you understand calculation of capital gains in case of depreciable capital assets? Simple, right? If there are no assets in the block or block is having negative value, in such case we do not claim depreciation. We calculate capital gains in case of depreciable capital assets. Good morning. Stand up for some time. Everybody please stand up for some time. నీ ఫ్రెండ్ చాక్లెట్ ఇవ్వలేదా? Next, apportionment of depreciation. Shall I explain this concept? See, generally conversions will happen. Private limited company will get converted into LLP. Sole proprietorship will get converted as a private limited company. Sole proprietorship will get converted into LLP. Or in the middle of the year, amalgamation can happen. Or in the middle of the year, demerger can happen. See, all these conversions, if they happen either at the beginning of the year or either at the end of the year, no problem at all. Okay, the newcomer, the transferee will claim depreciation for the whole asset. If these conversions happen in the middle of the year, then the problem comes. In such a case, we will calculate depreciation for whole year based on usage of asset by earlier person and new person. We are going to apportion the depreciation. Is it clear? For example, amalgamation of company. In case of amalgamation of company, capital assets will be transferred from amalgamating company to amalgamated company. Let's say Vodafone and Idea. Vodafone and Idea got merged and they formed a new entity called VI. Now Vodafone will transfer assets to VI, right? Let's say date of merger is 9th December 2024. Date of merger is 9th December 2024. Up to 9th December 2024, asset is used by Vodafone. Just it is transferred to VI, immediately VI cannot use it, right? VI started using the asset from 1st February 25. 1st February 25. Immediately it did not use because to set up it again time will take. It started using from 1st February 25. Can you calculate number of days of usage by Vodafone? 1st April 24 to 9th December 24. Calculate April 30 days, May 31, June 30, July 31, August 31, September 30, October 31, November 30, December 9 days. 253 days. From 1st February to 31st March. In February 28 days, March 31 days. 59. So we will calculate depreciation for whole year, assuming only one person has used that asset. Let's say depreciation is 80,000. This 80,000 we will divide among Vodafone and VI in the ratio of 253 is to 59. Is it clear? That means like if in the middle of the year, if conversion happened or if transfer of asset happened by cause of amalgamation demerger, in such a case, we will calculate depreciation for whole year assuming asset is used by a single person. After you have calculated depreciation, such depreciation will be apportioned between previous owner and new owner based on number of days of usage of that asset. Are you able to understand? Shall we solve one problem so that you will get clarity? Open this question, Hanif. Hanif Private Limited is converted into Hanif LLP. So private limited company is getting converted into LLP. If that conversion happens either at the beginning of the year or at the end of the year, happy, no problem at all. We will calculate depreciation for only one person. But here it is happening on 1st January 2025. That means conversion is happening in the middle of the year, correct? The following particulars are available to you. Cost of land, whether land is depreciable asset, waste fellow. No, you should not calculate depreciation on cost of land. If anyone calculates, he is person of unsound mind, correct? Written down value of machinery as on 1st April 24. How much? 3,30,000. For machinery, rate of depreciation is 15%. Patents acquired on 1st June 2024. For patents, rate of depreciation 25%. 1st June 24 means put to use greater than 180 days, right? So we will calculate full rate of depreciation. Above building revalued as of conversion was on the date LLP. See, revaluation figures should not be considered for calculating depreciation. Whatever the actual cost is there, actual cost will be added to the block. Revaluation figures will not be added to the block. Now, tell me one thing. Initially it is Hanif Private Limited, right? Hanif Private Limited. It got converted as Hanif LLP. Correct? Date of conversion 1st January 25. That means from 1st April 24 to 1st January 25, for how many days it is used by Hanif Private Limited? Calculate how many days it is used. Correct, 275? It was used for 275 days. Now, Hanif LLP got it on 1st January. Right from 1st January, whether LLP is using that asset? No. You can see, though conversion into LLP took place on 1st January, there was a disruption of business and assets were put to use by LLP only from 1st March 2025. That means from when asset is used from 1st March 25. That means Hanif LLP used the asset only for 31 days. See, for calculation of depreciation, we will assume asset is used by only one person. We will calculate depreciation for whole year. Whatever the depreciation that is calculated is there, that is to be apportioned in the ratio of 275 is to 31. Is it clear? Are you able to understand? Opening written down value. On opening written down value, we will calculate depreciation completely, right? So, will you calculate how much is opening written down value? How much is opening written down value? Opening written down value 3,30,000. So how much is depreciation? 3,30,000 into 15%. Assume it is used by single person. How much? 49,500. Correct? This is to be apportioned in between Hanif Private Limited and Hanif LLP. Correct? How do you apportion? 49,500 into 275 divided by how much it is coming? 485. Again, you do not start from scratch. 49,500 minus 44,885. Sorry, 485. How much? 5015. 5015. Now, did you understand how to apportion the depreciation? Patents are also there, but careful. When patents were purchased? Yes, patents were purchased on 1st June 2024 and they are used up to 1st January 25. For how many days the patents were used? Calculate. Two 14. Ignore 1st January, okay, because that is the date of transfer. On 1st January it was not used. Up to 31st December you need to calculate 214 days, right? And they started using from 1st March. They used it for 31 days. So how much is value of patents? 3 lakhs. Patents are put to use for greater than 180 days, right? So you will calculate full rate of depreciation. 3 lakh into 25%. How much? 70? So depreciation is 75,000. This 75,000 is to be apportioned between previous owner and new owner, private limited company and LLP based on 214:31 ratio. Correct? Shall we apportion? 75,000 into 214 divided by 245. How much? 60? Here 75,000 into 31 by 245. How much? Now did you understand how to apportion the depreciation? Is it clear? Apportion takes place in the middle of the year. Here what students will do wrong? Okay, what they do is from 1st April to 1st January. 275 days. From 1st January to 1st March they will calculate. Like January 31, February 28, March 31. It will be 90 days. Based on 275 is to 90 they will apportion, and it is completely wrong. You should not apportion based on total number of days in a year. You should apportion based on number of days of usage by each person. Is it clear? So apportionment should happen based on usage. Is it clear? You can see here, apportioned between predecessor and successor in the ratio of number of days for which assets were used by them. Is it clear? Did you understand? Shall I explain the next concept? Unabsorbed depreciation. In any previous year, if there are no profits to set off depreciation, or existing profits are insufficient to set off depreciation, then the concept of unabsorbed depreciation will exist. When will unabsorbed depreciation exist? If there are no profits to set off depreciation or existing profits are insufficient to set off depreciation, then unabsorbed depreciation will exist. Listen, I will draw a P&L account. Sales 90 lakhs, expenses before depreciation 105 lakhs. Here only there is loss of 15 lakhs. Now can you set off depreciation? Let's say depreciation is 8 lakhs. Can you claim depreciation? You cannot claim depreciation. To set off this depreciation of 8 lakhs, are there profits? There are no profits to set off depreciation of 8 lakhs, right? So we call this 8 lakhs as unabsorbed depreciation. Are you able to understand? So if there are no profits to set off depreciation, we call that depreciation amount as unabsorbed depreciation. This is case 1A. Okay. Now case B. There are profits, but profits are not sufficient to set off depreciation. Is it clear? Now let me write P&L account. Sales 70 lakhs. Expenses before depreciation 68 lakhs. Depreciation is 6 lakhs. Now are there profits? Profit before depreciation is 2 lakhs. Depreciation is 6 lakhs. Out of 6 lakhs, 2 lakhs you can set off, right? 2 lakhs you can set off. Depreciation 2 lakhs. Thereby it will be 0, correct? 70 lakhs. Thereby it will be 0. Now balance 4 lakhs could not be set off. Am I correct? So whatever the depreciation that could not be set off due to insufficient profits is there, this 4 lakhs we call as unabsorbed depreciation. Is it clear? Are you able to understand? Unabsorbed depreciation will exist in 2 cases. If there are no profits or available profits are insufficient to claim depreciation. Is it clear? Good. Sir, what is the tax treatment for unabsorbed depreciation? Here unabsorbed depreciation is 4 lakhs, right? This 4 lakhs in current previous year, it is eligible for intra-head set off. That means if there is any other business, in other business if there are profits, you can set off this 4 lakhs with other business profits. Let's say other business profits are 1 lakh. Okay, other business profit is 1 lakh. Now you will set off depreciation. After you set off depreciation, still how much is unabsorbed depreciation? Unabsorbed depreciation is 3 lakhs. This 3 lakhs is eligible for inter-head set off. That means this 3 lakhs can be set off against other heads of income except salary income. Is it clear? Balance unabsorbed depreciation is eligible for Interhead set of except salaries. Is it clear? Interhead except salary. Now immediately Kaushik will get doubt. Sir, there is only income from house property 1,20,000 rupees, sir. Okay, there is no other income. How much is income from house property? In current previous year, income from house property 1,20,000. So unabsorbed depreciation you will set off 1,20,000. After setting off unabsorbed depreciation, still how much is unabsorbed depreciation? 3 lakh minus 1.2 lakhs, still unabsorbed depreciation is 1.8 lakhs. This will be carry forwarded to subsequent years. Sir, for how many years it will be carry forwarded? It will be carry forwarded for unlimited years. Even in subsequent years also, let's say next year, next previous year 25-26. Let's say profit is profit is for example 8 lakhs, profit is 8 lakhs. First priority in next year, if there are business profits, first priority you should reduce that particular year depreciation. You will reduce 25-26 depreciation 3 lakhs. Second priority should be given to brought forward losses. Is it clear? Second priority should be given to brought forward losses. For example, in case 1 there are brought forward losses 15 lakhs. In case 2 there are no brought forward losses, but in case 1 brought forward losses 15 lakhs are there, right? If there are any brought forward losses, you will reduce brought forward losses. Okay, let's say from other business there is brought forward loss of 1 lakh, for example. Second priority should be given to brought forward losses. After setting of brought forward losses, third priority should be given to brought forward unabsorbed depreciation. From 24-25, how much is brought forward unabsorbed depreciation? 1.8 lakhs. That will be reduced as third item. Is it clear? So in subsequent years also, brought forward unabsorbed depreciation is eligible for set off. But first you should not set off unabsorbed depreciation. First priority should be given to that particular year depreciation. Second priority should be given to brought forward business losses. Third priority of set off should be given to unabsorbed depreciation. Again Kaushik will get doubt. Sir, even in 25-26 also, if unabsorbed depreciation 1.8 lakhs is could not be set off, then even in subsequent years also unabsorbed depreciation is eligible for interhead set off except salary. That means even in let's say in 25-26 profit is 0, then 1.8 lakhs is again unabsorbed depreciation, right? That is eligible for interhead set off in 25-26 except salary. Sir, after doing interhead set off also still unabsorbed depreciation. Story repeat, it will be carry forwarded to subsequent years. Are you able to understand? This is the concept relating to unabsorbed depreciation. Unlimited. వినలేదు నువ్వు క్లాస్ సరిగ్గా. You have very big life, right? But the person who made loss, he alone have right to set off unabsorbed depreciation. For example, Mr. A had made loss, unabsorbed depreciation. He died. Okay, or after death he cannot, the person who has made loss of unabsorbed depreciation, he himself has right to set off the unabsorbed depreciation. Is it clear? You can see same SSC, that point will be there. Unabsorbed depreciation can be set off can be done by the same SSC. Okay. Continuity of business is not relevant. I told you, right? Business is closed. You have opened a new business. Okay, previous business unabsorbed depreciation you can set off against profits from new business. Is it clear? Continuity of business is not relevant. The business in which you got unabsorbed depreciation, even though it is closed, still you can carry forward unabsorbed depreciation and you can set off against profits from other business. Is it clear? Next, asset used partly for business and partly for personal purpose. In PGBP, one point will be there. Only business related expenditure is allowed as deduction. So if an asset is used partly for business and partly for personal purpose, income tax officer will determine how much percentage that asset is used for business. Only that much percentage depreciation is only allowed as deduction. Only that much percentage only will be reduced from written down value of the block. Is it clear? Let's say there is car worth of 10 lakhs. Like this car, 45% I use it for business, 55% I use it for personal purpose. Generally, for car, rate of depreciation is 15%, right? How much is depreciation? Depreciation will be 10 lakhs into 15% into, for how much percentage I used it for business? 45%. So into 45%, depreciation allowed is equal to 10 lakhs into 15% into 45%. How much?
67,500.
67,500. So only this is allowed as expenditure. Again you will get doubt, sir, there will be block, right? Opening written down value, additions, okay, we will reduce deletions, sale value of deletions. At that time, how much current year depreciation is reduced from block? Current year depreciation of 67,500 only will be reduced from block. Let's say in that block there are no other assets. How much is cost? Cost is 10 lakhs. From that, how much depreciation is allowed? Depreciation of 67,500 is only allowed. How much is balance? 9 lakh 32,500. That will be closing written down value. Is it clear? So whenever asset is used for partly for business purpose and partly for personal purpose. For business purpose, whatever the percentage is there, only to the extent of business purpose, whatever the amount of depreciation is there, only the depreciation is allowed as expenditure, and same amount of depreciation will be reduced from written down value of the block. Is it clear? Good. If asset is used to earn composite income, see, you know, right, in agricultural income, your faculty would have discussed, like whenever SSE is engaged in the business of growing and manufacturing of tea, or growing and manufacturing of rubber, growing and manufacturing of coffee, okay, in that cases specific percentages are there: 60 is to 40, 65 is to 30, 75 is to 25. Based on those percentages, we are going to divide the income between agriculture and business. What are we going to divide? We are not going to divide revenue, we are going to divide income. Income means what? After expenditure. So like for example, I am into the business of growing of rubber, okay, growing and manufacturing of rubber. Whatever the revenue is there, from revenue I will reduce all the expenses. After reducing all the expenses, whatever the income comes, that income will be apportioned between agriculture and business in the ratio of 65 is to 35. So in that case, for example, I am in growing and manufacturing of rubber, right? Like I purchased a bike. Morning on that bike I will go to business. It is exclusively used for growing and manufacturing of rubber, okay, but whatever the income from growing and manufacturing of rubber is there, it is not totally business income. Now for example, bike cost is 2 lakh rupees, rate of depreciation is for example 15%. How much is depreciation? Depreciation is 30,000, right? Depreciation is 30,000. Total 30,000 is allowed as expenditure. Total 30,000 is reduced from written down value of the block. The reason is split. That bifurcation is not done at revenue level, bifurcation is done at income level. That means income means what? After allowing all the expenses. So depreciation of total 30,000 is allowed as expenditure, and after allowing 30,000 depreciation as expenditure, whatever the balance income is there, that is to be apportioned between agriculture and business in the ratio of 65 is to 35. Is it clear? So as it is used for both purposes, total 60,000 is allowed as expenditure, and 60,000 will also be, sorry, total 30,000 is allowed as expenditure, and total 30,000 will be reduced from written down value of the block. Is it clear? You can read this example. Here Hari is engaged in the business of growing and manufacturing of rubber. You know, right, in case of growing and manufacturing of rubber, whatever income comes, 65% is agriculture income, 35% is business income. So turnover is 25 lakhs, depreciation is 2 lakhs, and other expenses are 15 lakhs. Do we divide agriculture and business at revenue level? No, we do division at income level. So 25 lakhs revenue, depreciation total was reduced, okay. Other expenses are also reduced. How much is income? Income is 18 lakhs. So out of 18 lakhs, agriculture income is 11.7 lakhs, business income is 6.3 lakhs. Depreciation of 2 lakhs will be reduced from written down value of the block. Are you able to understand? So whenever asset is used to earn a composite income, total depreciation is allowed as expenditure. Total depreciation will be reduced from written down value of the block. Is it clear? Are you able to understand? Next. In case of accounts, how do we calculate depreciation? We calculate depreciation for each asset individually, right? Do you have any doubt? Now, written down value block concept of depreciation we have discussed. There are power sector undertakings or power generation undertakings. Power sector undertakings, they have option to calculate depreciation. Either they can follow straight line method or they can follow written down value method. But very important, only for tangible assets option is there. For intangible assets, they have to calculate depreciation under written down value. I don't know whether you know this point or not. In case of power sector undertakings, for calculation of depreciation of tangible assets, very important. So option is available for only tangible assets. For intangible assets, you need to calculate depreciation under WDV method. So for calculation of depreciation in case of tangible assets, either they can follow straight line method or they can follow written down value method. If they follow written down value method, they have to calculate depreciation block wise. Whatever the concept that we have discussed till now, they have to calculate depreciation block wise. If they are following straight line method SLM, then they need to calculate depreciation for each asset individually. Is it clear? Just like how depreciation is calculated in accounts, in the same way depreciation is to be calculated even under income tax. Is it clear? Now next, sir, power sector undertakings are following straight line method of depreciation. Now how capital gains are calculated? Next question. I explained about depreciation calculation for power sector undertakings following straight line method for tangible assets. Now let us see capital gains. Capital gains I will explain with one example. For example, I purchased land. Land అంటున్నానండి. I purchased building. మీతో కూర్చునేసరికి నా మైండ్ కూడా పోయింది. Building is tangible asset, right? Building cost is, let's say, 10 lakhs. Let's say rate of depreciation is 5%, okay, and method of depreciation is SLM. Building is used for 5 years. Building is used for 5 years. After using the building is sold. Case A, building is sold for 4 lakhs. Case B, building is sold for 7.5 lakhs. Case C, building is sold for Case C, building is sold for 12 lakhs. In case B, building is sold for, let's say, 9 lakhs. Okay, 3 cases. Now will you calculate depreciation and tell me the written down value after 5 years? How much is cost? Cost is 10 lakhs less depreciation for 5 years. I am sorry, not rate of depreciation. Let's say useful life is 10 years. Useful life is 20 years. Useful life is 20 years. Will you calculate depreciation? 10 lakhs divided by 20 years into 5 years. How much? 2,50,000. So after 5 years, how much is written down value? After 5 years, written down value is 7.5 lakhs. Correct? Now, case 1, it is sold for 4 lakhs. Is there gain or loss? Sale value 4 lakhs. Written down value 7.5 lakhs. Is there surplus or shortfall? shortfall. How much is shortfall? 3.5 lakhs. The shortfall is also called as terminal depreciation and it is allowed as expenditure under PGBP head. This shortfall is also called as terminal depreciation, allowed as depreciation in P&L account under debit side, expenditure allowed as deduction. Case 2, sale value is 9 lakhs, written down value 7.5 lakhs. So is there surplus or shortfall? Surplus how much? 1.5 lakhs. Whether surplus is more than depreciation claimed or less than depreciation claimed? How much depreciation was claimed? Depreciation claimed was 2.5 lakhs. Surplus is 1.5 lakhs, which is less than depreciation claimed 2.5 lakhs. Now, whatever the total surplus is there, this is considered as balancing charge and it will be credited to P&L account. Credited to P&L account under PGBP head. That means to the extent of depreciation claimed earlier 2.5 lakhs, if I get any profit, that profit will be reversed back. It will be credited to P&L account under PGBP head. Is it clear? Next, case 3, sale value 12 lakhs. It was sold for 7.5 lakhs. How much is surplus? Surplus 4.5 lakhs. How much is see, whatever the surplus is there, out of surplus to the extent of depreciation claimed earlier. How much depreciation claimed earlier? To extent of depreciation claimed earlier. How much? 2.5 lakhs. That will be credited to P&L account under PGBP head. How much is balance profit? Balance surplus? Balance surplus is 2 lakhs. That will be considered as short-term capital gain. Is it clear? Think logically. Building was purchased for 10 lakhs. After 5 years, it was sold for 12 lakhs. That means over and above cost, they are receiving capital profit, extra profit. So that's why it is taxable as capital gains. Think logically. In first year only, they sold for 12 lakhs. Will you provide any depreciation? Straight away, you will calculate capital gains of 2 lakhs. So over and above cost of the asset, if any asset is sold, whatever the extra profit is there, that is taxable as capital gains. Is it clear? Are you getting conceptual clarity? Good. There is one small topic which is quite contradicted. I wanted to teach that right now. See, calculation of capital gains in case of power sector undertakings following straight line method of depreciation. I have given chart. Once you understand the problem, automatically you will also understand the chart. Once you see the chart, you will get clarity. Just have a glance. So have you seen? Did you get clarity? Now, transitional depreciation provisions under default tax regime. Sir, what are you talking, sir? Yeah, I am saying correctly only. Listen. What I said, under default tax regime, additional depreciation is not available, right? 115 BAA, BAB, BAC, BAD, BAE. Additional depreciation is not available. This concept of 115 BAC came in Finance Act 2023-24. Let's say in 22-23 there is unabsorbed additional depreciation. Unabsorbed additional depreciation. Automatically what it will happen? It will be carry forwarded to next previous year 24-25, right? In 24-25, SSC is paying taxes under default tax rates. If SSC pays tax under default tax rates, additional depreciation cannot be carried forward. Even though it comes forward, it cannot be set off. Okay, so whatever the brought forward unabsorbed depreciation is there, it cannot be set off. I am sorry, it can be carried forwarded, but it cannot be set off. It cannot be set off. Now, SSC will feel bad. SSE will tell, sir, in 20 to 23, I do not have profits, sir, to set off additional depreciation. That's why there is unabsorbed additional depreciation. In 23-24, you only gave me option. I am paying taxes under default tax rates. You are only saying unabsorbed additional depreciation is not eligible for set off. This is unfair, na sir. So SSE will will tell his grief. Now, what income tax department said? If SSE in earlier years, in case of an SSE, if there is unabsorbed additional depreciation, and in previous year 23-24, if SSE is paying taxes under default tax rates, as additional depreciation, unabsorbed additional depreciation is not able to be set off against current year profits under default tax regime, whatever unabsorbed depreciation is there, this will be added back to block of assets. That will be added back to block of assets. If it is added back to block of assets, again on that he will claim normal depreciation, correct? So somehow he will be having expenditure claim benefit. Okay, so that is the rule which was brought in Finance Act 2023, not now. Okay. Now the dispute is they only gave clarity for Finance Act 23. They did not give clarity for Finance Act 24. That means in 23-24 he is paying taxes under optional tax rates, okay, or regular tax rates. He has unabsorbed additional depreciation. In 24-25 he shifted to default tax regime. Now unabsorbed additional depreciation, should it be added back to block of assets or not? No clarity was given. Soon I think they will come up with a circular. Okay. You can see, you will understand. On 1st April 23, written down value is 50 lakhs. Unabsorbed additional depreciation is 5 lakhs. In 24-25, what happened? He chose default tax rates. If he chooses default tax rates, can he set off unabsorbed additional depreciation? He cannot set off unabsorbed additional depreciation. So as per new rule, as on 1st April 2023, it will be adjusted as follows. Written down value after adjustment 50 lakhs plus 5 lakhs, it will be 55 lakhs. This is, my assistant would have made Control C, Control V 3 times. Depreciation, like depreciation for assessment year 24-25 will be computed on 55 lakhs. See, opening written down value 50 lakhs only, but we added back unabsorbed additional depreciation, right? So again it is getting depreciated. See, whatever 5 lakhs unabsorbed additional depreciation, as it is added back to block of assets, it is again getting depreciated. So we will calculate depreciation on 55 lakhs. For assessment year 25-26, no further adjustment required. Is it clear? So this is all about depreciation concept. Thank you for listening so patiently. I hope, like, I tried to make zero doubts possible through this lecture with regard to depreciation. I hope I achieved it. If at all still you have any doubts relating to depreciation, you can post on my Telegram channel. I will revert back to you. Okay.